Bring in market watcher Michelle McKinnon. The interest rates moving higher, stocks moving lower. So is this going to be the scenario for a while? We went through this in February, and it was very painful.
Yeah, I would definitely say it's short term. That normally, right, stocks and bonds do not move the same way. And it reminds me of when I first got in this business, and that happened, and I panicked, and I was like, wait, stocks and bonds are supposed to move separately. It's very unusual, and I think if stocks fall further here, bonds will start to rally.
Hold on, as stocks fall further, okay, so at some point, though, these yields continue to go up. They do put pressure in certain parts of the market. And what was interesting yesterday is those parts, utilities, real estate, were actually higher.
Yes.
So we're getting these odd mixed messages, and yet there's still, and this fear in of itself, the fear in February as we approached 3%, the market really cratered, and now again it's cratering 3.2, 3.3, 3.4. These are all relatively low numbers. Why is the market even panicking in the first place?
Well, markets panic for uncertainty and unknown reasons, right? They move unpredictably. But I think your point of 3.2% is not that high. I mean, the average is 6% over the past 50 years. So when we think about 3.2%, it's not that big of a deal. And if anything, Charles, I would be more worried if the 10-year kept sitting at 2.4. That would mean that we're having a flattening yield curve and then maybe even an inverse of the yield curve.
So in other words,
that's more worrisome.
A deflationary sign.
Yes.
Which is obviously a lot worse than inflation.
Way worse. We want inflation. Inflation is healthy.
Well, we love when our paychecks inflate and the value of our homes inflate, right? And I want to ask you about small business optimism because we got a new report out this morning. The September index, third highest in the 45-year history. The jobs component of it, really phenomenal. That's at an all-time high with respect to these compensation wages and compensation going up. What does it mean for the economy and for the stock market? Yeah,
I think for small business optimism, that's fantastic news. And I do not think it's getting enough coverage because small businesses make up 60% of all new jobs in the country. That's huge. And what was also part of the jobs number is the lowest paid Americans saw a 5% increase in their wages. That is amazing news that hopefully we're finally starting to see wage growth that should push consumer spending forward as well as these markets forward.
Real quick, I want to ask you about one component of the market, technology stocks. We have the board up right now. They're taking it on the chin. Apple got a rare sell rating this morning.
Yes.
Amazon is breaking down. We already seen Netflix and Facebook fall apart. Is the big tech play over?
I would love to say that big tech is finally over. But, you know, I think it's hard to make a conclusion for just 1 month, Charles. I think what is really concerning is all the headlines, right? Facebook with their data, Google last night with all their data breaches. I think that's more concerning than trying to pick a trend of if tech's done. I think tech might be done if we continue to see these huge headlines.
All right, Michelle, thank you very much. Really appreciate it.
Yeah.